Hello everyone and welcome to Before the Bell in 3D. This is Jose Blasco. How are you everybody? It's a pleasure to join you like every Monday. This is our week 38 Before the Bell in 3D session. We are doing this live, even though of course this is then recorded on our YouTube channel and you may be watching this recorded. And today is September 18, 2023. So the plan for today, as always, is to use real-time charts to do some market analysis. I will be doing that as we go. But also, I wanted to point at the fact that we also summarize all this information in our newsletter. I am highlighting on the screen a QR code and a URL for you to go get the newsletter if you don't have it yet. It is free. We publish it on LinkedIn, but that is also delivered to your email inbox. And it looks a little bit like that, where we point at the 5 key markets I'm going to be reviewing today: S&P 500, crude oil, gold, US dollar, and the back Bitcoin. And then there is some statistical information about those markets, as well as some pictures of the charts, which I'm gonna go over this live instead of screenshots. But in any case, if you miss these sessions live, I guess it's very handy to have this information in your inbox early in the morning on Monday, and that way you can plan for the week ahead, which is the whole purpose of these sessions. So let's begin with the first market that we are going to analyze, which is the S&P 500. And the first thing that we need to do is that we need to look at the climate, which, as you can see here, the climate is a climate of a red color. But we can also see that apart from being red, we are dealing with what we call a thin dot. So if I zoom in a bit more, you can see how, sorry about that. Here we go. So when you compare this dot compared to those red dots here, for example, so those red dots here were thick, where the current red dot is thin. For the ones of you that are new, you need to know that this means that the climate is not confirmed. So there is a directional component to the downside, that's why it's red, but statistically speaking, this market is not showing a behavior that carries with it a statistical advantage by either going long or going short, and therefore the dot is thin, suggesting that if you trade the daily time frame, which is the one I'm using here, so probably waiting until the dot becomes either blue or red thick, that would be a better decision from a statistical point of view. Of course, no need to say that if you change time frame, the trading opportunities will change. You are shooting for larger moves or lesser moves, and therefore the climate is going to be adapted to that. Our auto climate tool, as well as auto UFOs that you have on the screen, is something which works real time for all markets, all assets, etc. Okay, so by the way, I am highlighting on the screen in case you want to go take a look at our website on where the tools are, so you can make your selection. We support auto climate, auto UFOs for multiple platforms. Okay, so we looked at the climate. The climate is not confirmed. We can see here a little cloud, so it's rainy, but again, not confirmed. And the statistics suggest that in a down climate, a normal duration for the climate is 3. We are currently starting the climate, so count is 1. So 1 out of 3, well, again, the climate is not confirmed, but if it does end up propagating, so the normal expectation would be to have this climate to move down in waves of 3. This is count 1, standard deviation 3. Okay, this is what we have on the newsletter that you have on your TradingView real time. I didn't say, again, I assumed it, I guess. Auto Climate is a free tool. Okay, so a moment ago I shared the URL to go check our website. You will find it there. What else? On-field orders. Okay, so on-field orders to sell, red color. On-field orders to buy, green color. On-field orders, let me write it down. On-field orders, we also call them UFOs. And they do look like flying saucers, isn't it? So those are the on-field orders: green color to buy, red color to sell. So in other words, the expectation is when the market comes to the green, the buy on-field orders will get filled, producing a move to the upside, likely going to produce a move to the upside. When we go to the red, sell on-field orders will get filled, producing the opposite type of movement. Therefore, notice how where the UFOs are in the present is where we expect upcoming turning points that have not happened yet. And this, of course, is extremely relevant in trading because you can use that as entries, as exits. If you do non-directional trading, you can use it as ranges, all of that. Okay, so that's what we have. So on fillers to sell 45.95.25, on fillers to buy 44.71.75. That's where we are. Okay, cool. And finally, going back to the newsletter, the third dimension of our analysis, we looked at the climate, we look at the UFOs, right? 45.95, 44.71. The third dimension is going to be our expected moves, and this is data that we extract from options prices. So this is not by looking at the charts or looking at time frames. This is basically looking at options and reverse engineer options pricing models to conclude what is the expected move in those stocks given the current process of options that vary through time. Okay, and they vary not only because of the price of the stock is moving, but they vary because of other aspects, one of them being the expected move. So 39 points a day is expected, 86 points a week is expected, 117 points a month is what is expected in the case of the S&P. This is the current level of volatility, quite similar to the last week. Next market in line, and now I will speed up a little bit this analysis. Next market in line is our crude oil. Here is crude oil. So we have a very overextended climate, blue, thick, confirmed, up climate. It's been running for 14 candles. A normal thing to happen based on stats is 7. So it's doubled what's normal. Another way to say that is 2 standard deviations. In other words, statistically unsustainable from now. And I mean, I guess we can see that this move is really not a joke. So very powerful wave, likely going to have some sort of a correction based on statistics, but based on on-field orders, there is nothing to stop crude oil from keep going up all the way to 100. So of course, given the fact that we already reached 14 out of 7, this market may be a bit on the tired side, and we may get a little bit of sideward action and then finally comes down. And when it comes to either this grand UFO or this grand UFO, we may have another big leg all the way to 100.89. That certainly could be expected, knowing that we have buy on-field orders at 89.64. So very relevant profit ratios here in the case of crude oil. So again, statistics for the climate: sunny, current count 14, a normal thing is 7. So I mean, could it keep going? Of course. Is it likely? No. The most likely thing would be some sort of a retracement. But knowing that we have on-field orders at 84.64, you would expect just a little tiny bit of a retracement and then another massive leg, potentially going to reach 100.89. Expected moves extracted out of options on crude oil futures. That is 1.54 points a day, 3.40 points a week, 7.07 points in a month. That's the expected move. Next market in line is going to be our gold markets. So looking at this real time. So what do we have here? We have a change of climate, which is confirmed. Thick and blue dot number 1 out of 6. 6 is a normal thing to happen. This is number 1. So we are just starting a climate. If the climate tries to fail, the buy on fielders located at 1938.4 are likely going to push it back higher. But if it rallies to 1960.7, we may end up seeing gold coming back down. So in other words, in the short term, to be honest, no matter the statistics, the expectation would be a little bit of sideways action, given the distance between those green and red UFOs, which is very near. Okay, so this is nothing related to probabilities. This is related to what's available in the marketplace. And we now know that 1960 is where the sell orders are, and 1938 is where the buyer's orders are. So even though we are in a sunny climate that just started count 1 out of 6, where we may get a fantastic leg to the upside, well, the fact that sell on field orders are so close, like 20 points up, something like that, so we may get sideways action instead of some trend. Okay, expected move: 12 points a day, 27 points a week, 50 points a month. This is what would be expected by looking at prices of options on gold futures. Next market in line is going to be our US dollar index. And when looking at the US dollar index, 1, 2, 3, here we go. So we certainly can see these amazing moves that we have been discussing. In the last meeting, when we got together last Monday, we were talking about this UFO located at 104.24.5. Notice how there was a gap down on the dollar. I guess the world believed the dollar was going to crash, just to come to where the buyers are and look at the beautiful move to the upside on its way to the next UFO at 105.33. Okay, so the dollar index doing its thing. Of course, statistically tired at this moment in time, 12 out of 5 being a normal thing to happen, 12 being the current status. So it's over 2 standard deviations of what's normal, and therefore statistically unsustainable. But again, I would not be surprised, given the distance to the red UFOs, that a little tiny push to the upside is going to happen before we have a change of climate on the way back down to 104. Okay, cool. Now, speed of movement for the dollar index futures, 0.46 points a day, 1.01 points a week, 2.10 points per month. Again, this is extracted from options on currencies. And the last market for us to analyze is going to be our backed Bitcoin, one of the Bitcoin markets that trades in the ICE exchange. And we can see here how we have a non-confirmed climates for 3 days in a row. So lots of lack of decision. I mean, and we can see the price action really that is going nowhere. So statistically speaking, it's not defined in a proper way. So waiting is probably the smart thing to do in this case, or trade other timeframes for either larger or shorter moves. On the daily time frame, again, that's what we have. And a normal thing to happen in an up climate is 6. We are currently in candle number 3. So again, to be honest, we are in the middle, right in between the red and the green. We are really more or less in the middle. So anything could happen here. So trading this market really in this time frame, it's a little bit of a gamble. I would certainly, if it's me trading this market and, I use my own set of trading rules from my own trading plan, waiting is what I do. Okay, so I'm not saying that you have to do that. Everybody trades differently, but again, statistics are a good reference, isn't it? And this is one of my bread and butters when trading. So we know the climate, sell on field orders exactly where last week, 29,000 plus, buy on field orders 24,800. Exactly same location, because this market basically hasn't moved. That's why the climate is unconfirmed, and therefore we have the same values that we had last week. 667 points in a day, 1,469 points in a week, 3,000 plus points in a month. This is what is expected. And finally, now we're going to talk about the economic calendar, which is it's a long one this week. Okay, it's a long one. It doesn't fit on my screen, as you can see. So we have a few holidays in certain countries. Okay, we have today, Monday, we had some announcement in Australia that this is done. Of course, for interest rates, that's always an important one. We have the consumer price index in Canada. This is very important given the fact that everybody's looking at inflation these days. Same in the UK. On Wednesday, tremendously important day, we have Fed interest rate decision. Are they going to raise the interest or not, or what? We also have the GDP in New Zealand, rate decision for Switzerland, same for the UK. Well, as you can see, this is a spicy week. Okay, not only we have many items, many of the items that we can see are very, very relevant. So I would expect volatility basically almost every day of the week. And again, depending on your methodologies, this may be the source of risk or maybe the source of opportunity, depending on the time frames that you trade, depending if you're directional, non-directional. But again, we may be dealing with a spicy week this week, given all these external factors that may add plenty of orders in the marketplace. And before we conclude, I will highlight a QR code on the screen as well on the upper left, so you can go get our book. We have published our Mystery to Mastery series book. We got awards for the book, that makes us proud. This book is available in paperback and ebook format. We use Forex as an asset because currency is probably the more generic asset you could use, because everything is priced in a currency, even when you trade stocks or options or futures. In the end, it's all dollars or euros or pounds or yen or you name it. And in that sense, understanding more about the market and using Forex as an example, so it's a great way to understand all markets. So this book can certainly help you to trade no matter what you trade. even though, of course, the examples are specific to Forex, and again, that may be more or less convenient to you depending on your preferences. But know as well that with this book, you have access to one of our courses. And because our courses, I'll give you also a link so you can go take a look. Because our courses also provide 3 months of free access to our UFO technology. So by buying the book, you get access to a course and the UFOs for multiple months, which basically gives you all the tools to learn, to acquire some knowledge, but also to practice so you can develop that knowledge into a skill. And now you are actually trading. Okay. Good. So everybody, it's been my pleasure as always to join you in this session on Monday, like every Monday, to prepare for the week ahead. Again, spicy week in front of us. This is nice. So enjoy it, trade well, be safe, and see you next week. In the meantime, later today we have an open meeting for our members. So if you are keen to join, certainly you can find us. You can find the instructions on our website. It's free for everybody. So you can just do that. And if not, just know we are here to help. There is a question section on our website as well that if you ever want to use, you can type your questions, your trading questions there, and we'll be happy to support you again, no matter if you are a client or not. Everybody, you guys take care. See you soon. Trade well. Enjoy the week. Bye-bye.